The key to trading with indicators. Traders use indicators to help determine opportunities in the markets, but which one do I use in my trading? The 50 moving average, specifically on the H1 time frame. I found this average to be really helpful in entering and exiting and even monitoring positions in the market. Now I know all indicators are lagging behind price, but that does not mean that we can't use it to help us build a bigger picture in the market. As you may know by now, currency strength analysis plays a really big role in my personal trading, and most recently EUR/Kiwi has been on our radar for short ideas. To the retail trading space, trading EUR/Kiwi isn't as sexy as trading Euro/USD, Pound/USD, or even Pound/Yen, but the point of trading is to have an edge, a statistical edge. If my edge involves trend and Pound and Yen are both strong, I'm limiting my possibilities with the particular trading style that uses the averages. Let me show you how I use the moving average and strength and weakness analysis in my trading. So here I have EUR/Kiwi. I've separated it from my currency strength meter that you're probably familiar with, just to show you. It's this one just up here, and I've just broken them into two separate charts, basically showing us euro and Kiwi. Again, I'm focusing on this market because that's where the potential for trend has been most recently, and the reason for that is because we've come into two extremes. Okay, I like to look at when a currency comes into an extreme, and then I like to look at an opposite currency to that, and then I like to see if they kind of form a trend. Okay, now I can see here the euro is the blue line, the orange line is Kiwi. Euro starting to push to the downside here, Kiwi reversed, getting stronger. So let's have a little look at that date there. That date is going to be important to us because it's when those two currencies align together. So I can see on the 20th of November, we had a signal that euro could move to the downside. And on the 20th of November, we also had the signal that Kiwi could start to get stronger again. Okay, so let's head over to EUR/Kiwi and let's look at that chart. So here's EUR/Kiwi. I have outlined already the 20th of September 2023. Now, if I look at the daily chart at this particular time, you can see that the market technically pretty bullish. You know, the market is making a higher high here. We have a higher low in here. And the market at that point had just found resistance back at these daily highs. Okay, so as a technical analyst, you're probably thinking, well, you know, the market's bullish. I want to potentially look at breaks above that high, or I want to look at getting long down towards these swing lows in here. However, currency strength meter analysis was suggesting to us that there's a good potential that this move is now over and that we should be on the lookout for a reverse. And you can see just from the daily chart how price has reacted ever since. Now, this is where the indicators come into it for me, because one, I want to take that kind of procedure process in place. You know, we've looked at why we want to be short EUR/Kiwi. Okay, now it's to follow the next step. Have a little look at the TA, the technical analysis. Does it match up with my bias? Well, at the moment, yeah, we're coming into a resistance level. So even if I didn't expect price to come all the way down to here, I'm expecting maybe moves towards these two lows through there. Okay, so let's just grab a rectangle tool. I'm just going to outline that low specifically at that point. Okay, and I'm also going to outline this sort of low through here, because they're obviously key areas. They're areas of support. So after finding that out, I'm then going to go to my lower time frame and look at how the price reacts with regards to that 50 moving average. Okay, so I'm just going to zoom back here, just zoom out a little bit, and we're going to go back to that 2023 area in September, and you can see, look what happens. Price breaks below that 50 moving average. Okay, it then makes a new low, which is important. Okay, when we're looking at trend, we're identifying higher highs and higher lows within the market. Now the 50 moving average is just a visual aid for me on the chart. If I know price is below, let's say this pink line here is the 50 MA, then I know that we're more than likely in a downward trend on this particular time frame. Okay, doesn't mean that the whole market's in a downward trend. I just know that we're breaking. Now I also have another moving average on there. That's the 200. That's kind of giving me my overall sort of sentiment at that point. But the 50 is where I really like to look for rejections, break belows, and that then allows me to look at what I was talking about before with regards to entering, exiting, monitoring those key conditions here. So I can see price comes up, closes below the 50. Again, it happens here as well, and here. Now, there are 4 examples of how you could have entered the market with regards to looking at opportunities to the downside. It also happens here. Now, if you've looked at my previous live stream analysis, or even the previous one of the previous videos of the live stream, I actually go over why I took a short position down into this area, and it has a lot to do with the fact that price came up to resistance and then closed below the 50 moving average. But if you just look at opportunities like this, then you don't have to go too in depth into all the other stuff around trading. You can just keep it really simple, and this is how I use indicators, especially in swing trading, to be able to determine where the trend is, how to enter and exit those positions. Hopefully that made sense. If it did, subscribe to the YouTube channel, leave a comment down below. Do you use any type of indicators in your trading? Thanks for watching, see you soon.